This is Baba Money, and guys, I broke it again. I broke the E-mini again this week using 100% automated trading. The automated strategy uses the two-legged pullback indicator to make trades. And the reason why this automated strategy is different from the rest is because most automated strategies use indicators that have lagged or delayed information. See, most indicators that automated strategies use a period or a look back period of certain amount of bars to make a calculation now. And the thing is about that is that it has to depend on past information to make current information. And so the information you're getting right now from the indicator is delayed or lagged. But the automated strategy that we are using at two-legged pullback here is not based on lagged information, but based on price action that is showing right now on the charts. See, the two-legged pullback indicator is a price action indicator. It counts legs and identifies two-legged pullbacks and also traps. And so the information that the indicator is showing is not based on past information, but it's based on current information because it's based on price action. Today, I'm going to do something a little different. I'm actually going to go into how I broke the E-mini for the last 4 weeks using this automated strategy. I'm going to go into the guts and the certain setup that this automated strategy is looking for. And hopefully it would actually help your trading, because if the automated strategy can do it, then guess what? You can do it as well. Are you guys excited for this? I know I am. If you like this kind of content and find it enjoyable, or been following this channel for a while now, it helps us out a lot if you like the video and subscribe to the channel. But one of the best things you can do to help us out is check out the official two-legged pullback website at www.twoleggedpullback.com. You can learn more information about the indicator, more information about the setup, and also more information about automated strategies. All right, let's dive right into exactly what this particular automated strategy is looking for and why it's such a high probable setup. Let's go back and look for one of the trades that it took automatically. This is a trade that it took. The setup that the automated strategy is actually looking for is a second entry, but not only a second entry, it's a second entry combined with a trap, as you can see here. It's a dark green number, also with a magenta box. The two-legged pullback indicator automatically identifies these certain setups, this second entry plus a trap combination. Why is this such a highly probable setup? The dark green number shows that this is a second entry long. I'll show it right here. You have your first pullback, first entry, second pullback, and after the second pullback, we have our second entry. Not only that, the magenta box shows that this is also a failed second entry short. And so you have the first pullback, first entry, you have the second pullback right here. I have to go a little higher so you can see the difference here. And then you have a failed second entry short that only goes down one single tick. And then the market reverses. So in one single spot in the entire market, you have all the bulls who are trying to go long on the second entry long, and you have all the bears who went short on the second entry short, and then it trapping them out and reversing on them all in one single spot. And you see that once the spot is hit, then it rockets up and actually reverses the entire market. This setup is highly probable in and of itself, but in the right context is even more probable. So to increase the probability, we take this setup only near the 20 EMA. And so you can see all the trades that happen are around the 20 EMA, where there is both a second entry and also a failed second entry all in one spot. And this is a great setup if you want to trade this manually, but it's very easy to spot because the two-legged pullback indicator identifies this setup with this dark green number and magenta box. And so let's take a look at some of the other trades that happened around the 20 EMA. The trade before this, we see here a very similar setup. It's kind of hard to read because of all of the contracts being traded here, but you see here a dark red number and also a magenta box. You see here that this setup is the exact same setup as the previous one, except it's going short. It is a second entry short, but also a failed second entry long. And it is identified by the indicator automatically with the dark red number in the magenta box. And so the same idea is here. You have a second entry short right here. First pullback, first entry, second pullback, and then the second entry. Not only that, you have a failed second entry long. You have the first pullback, first entry, second pullback, and now you have the second entry, but it only goes up about 3 ticks. It fails to make a scalper's profit, which is 5 ticks, and then the market reverses on the bulls here, and at one single spot again, you have both all the participants of bulls and bears in one trying to enter or exit their position all in one spot, and that's exactly where we want to enter in. And again, this is near the 20 EMA. The exciting thing is that this is not the only automated strategy at the two-legged pullback community. This is just one of many. And at the two-legged pullback community, we are tweaking these strategies together as a community to make the most highly probable setup. And when I say the word tweak, we're not tweaking based on circumstance. We're tweaking based on principles. And so every tweak that we try to make at the two-legged pullback community on these automated strategies are tweaks based on good trading principles. For instance, the strength of the signal bar is something based on principle that we want to enter in trades if the strength of the signal bar, which is the bar right before the entry bar, is strong or not. And so tweaks like that are tweaks that we're trying to make at the two-legged pullback community. Tweaks based on good trading principles, not arbitrary tweaks to match a certain circumstance that might work for a week but will fail in the long term. We're trying to make tweaks based on principles so they might not yield the best results in any certain week, but over a long period of time, if we implemented good principles on the automated strategy, that over time that these automated strategies will be profitable. And so that's the philosophy we're adopting at two-legged pullback. And again, we would love, absolutely love it if we would be part of the two-legged pullback community. And if you want to be part of it, you can check out the website at www.twoleggedpullback.com. And so I'll go ahead and run the reel on this automated strategy running 24/7 this week. And you can see the final result already on the top left. But I'll go ahead and show you the replay so you can see all the trades it takes. The two-legged pullback at the 20 EMA with a second entry and also a second entry trap in one spot. This is one of the setups that we love to trade manually, but because of how highly probable it is, we decided to automate it. So here are the results. And as always, happy trading and God bless.